can we ultimately get to a point where we can launch products without even thinking about it, right? 10 years ago, 20 years ago, if you want to build a website, you got to hire a webmaster, play with HTML code and all that stuff, right? It's very cumbersome. Today, you go to GoDaddy, get a domain, take a template, edit the content, press the button. You can launch your own thing. I want to bring the same experience here, but we're getting there, right? So no longer do you have to say, my God, I have to raise $5 million and hire a bunch of engineers and get to market maybe next year. You can use this, launch, try it, see if it's successful, launch another product, and just go forth with it.
This is the FinTech One-on-One podcast, the show for FinTech enthusiasts looking to better understand the leaders shaping FinTech and banking today. My name is Peter Renton, and since 2013, I've been conducting in-depth interviews with FinTech founders and banking executives. My guest on the show today is Timothy Lee, the co-founder and CEO of LendAPI. Now, LendAPI is a no-code lending platform that allows banks, credit unions, fintechs, and even retailers to launch their own lending and point-of-sale financing products quickly and without the heavy engineering investment. Think of it as a GoDaddy-style experience for financial products. Drag, drop, customize, and launch. In this conversation, we talk about how LendAPI works under the hood, from its visual drag and drop interface to its deeper capabilities for credit risk officers who want to deploy custom Python models. We get into their interesting Sunglass Hut deal and what that says about the embedded finance revolution. We also discuss Tim's participation in the CURQL accelerator focused on credit unions, his marketplace of 300 plus fintech partners, and the AI-powered tools LendAPI is building to automate document processing and underwriting workflows. Now let's get on with the show. Welcome back to the podcast, Tim.
Thank you for having me again.
Yeah, it's been a while. I look back at my notes. It's been almost 9 years since you were last on. It was 2017. Hard to believe that was 9 years ago. We recorded a podcast, I'm sure you remember, in Shanghai.
That's right.
And when we were there, I was part of our China trips. But tell us what you've done the last 9 years or so.
Well, first of all, I have one more kid since then. That app that I built, 9 years ago, 10 years ago was called Fluid. And it was helping college kids students to build credit while they're in college. And I feel like that problem still haven't been solved. But in that journey, I said, well, it took me a while to build a platform to manage all the loans, do all the payments, report to the bureaus. And I said to myself, I'm in the situation, I sort of kind of know how to do these things, but what about the other people? So I went on a long journey building lending platforms, lending cores to help the likes of me, right? If I want to build it again, I want to go to market really quickly, save all that investment I raised for marketing and customer acquisition, less about spending all that money building a platform that should have been commoditized. So I built a couple of these, and fast forward, I'm doing it again. I tell people this time, I don't even want to build this anymore. So I built almost like a Figma Framer styled platform. It's a DIY kind of a thing where you can actually log in, get an account, and build it yourself. We have all the widgets and wizards and things like that for you to quickly build something on your own without having to hire a team or invest heavily on the infrastructure. I've attempted to commoditize the product launching activity for anybody. It could be a bank, community bank, or just a fintech themselves. So that's what I've been doing for the past 9 years.
But you launched LendAPI it's relatively recent.
Yeah, so we just finished our second year anniversary, March 1st of 2026. Officially, we're on the year 3. I think with everybody else, serial entrepreneurs, you learn a bunch of stuff along the way. So this time, got a new partner, got a new team. We kind of know what we're doing now. So we were able to get this thing up and going, getting customers, get to revenue slightly quicker than the previous venture. So we're blessed to have a lot of really good people working on the team. So yeah, it's only been 2 years.
Where are you at on the fundraising journey? I think you started bootstrapping it, but where are you now?
Yeah, I'm always been a bootstrap founder, and my co-founder, Sam, he's a bootstrap founder as well. Both of us have, made a couple of exits. And we were just building this, having a lot of fun doing this LendAPI thing. And we got selected or wrapped into Techstars. So we
Right.
both of us moved to New York City for about a month, joining the Techstars program with Andreas Barretos as our MD. And as part of that journey, we really, really said to ourselves, to each other, my God, I mean, maybe we have something here. Maybe the venture capital route is the right route for this venture, for this company, that we can really raise money to scale, right? To really make a difference. And to do that, we can bootstrap this for 10 years, or we can get VCs to help us and get to stardom for what it's worth, maybe in 5 to 7 years, a shortcut a little bit. So we changed our mind and say, you know what, let's go raise money. And to answer your question, we raised seed round. People don't even mention their series name anymore. We raised a $3.2 million seed literally 2 years ago, end of 2024, from Cohen Circle in New York City, Ali Corp in New York City, to Great North Ventures out of Minneapolis, plus some of the local guys, Interlock Capital down in San Diego, Plug and Play, Techstars, all sort of chipped in to round out that tail. But we're on the journey to raise our second round. So in the midst of doing that right now to kind of really help us to grow on that gliding path.
I watched your presentation at Finovate, and congratulations on winning Best in Show there. That was awesome. And the pitch I think you were doing there was, I think it was a mortgage loan, and you just sort of showed how you could kind of launch a new mortgage product. So with that in mind, why don't you tell us a little bit about the types of products that you are launching and what it looks like and how it works under the hood?
Yeah, we'll give some flavor to this. The way we build this thing is for, this terrible thing to say, it is everything to everybody. You can literally build whatever you want to build down to the field, down to the page, connect all the third-party data providers to make that decision, right? Every page, every button. But what we find ourselves in the midst of is this whole embedded finance kind of a revolution. There's Klarna, the firms, and the Sezzles, and the Snap Finance of the world doing a lot of these like one-click checkout, paying for BNPL kind of a thing, right? And the way we structure our platform sort of fits right into that genre. So what we have done on the good days is that we sort of commoditized this technology. So any banks, financial services companies, credit unions, even big retailers that wants to build their own BNPL, point-of-sale financing experience, could use our platform and launch within a month or two. They can customize the look and feel. They can introduce, rewards programs, insurance products right in that flow. The look and feel is exactly on brand. And also they can control, which is one of the most important things, of underwriting criteria. A lot of the pure play BNPL players will say, hey, it's our way or the highway. We're going to give you 50% approval rate. The other 50% you're going to have to deal with on your own. So these retailers are saying, or the big banks are saying, well, we want a higher approval rate because we want to, work with our merchants a little bit better. It's more consistent. They can approve everybody. So the only way to get there is probably build their own experience and have that waterfall sort of within their control. So they're not beholden to somebody else's credit underwriting strategy. Today is 46% approval. Tomorrow might be 40%. Next day could be 50%. So they can't control that in-store, in-branch experience using a pure play BNPL player because they make decisions to cater to their own portfolio health, right? Not necessarily a better customer experience in the store. So we find ourselves in this whole embedded finance space, building a lot of these private label solutions for banks and credit unions and retailers so they can really own that process. And the customers feel better as well. I feel like it's on brand. So when they're buying some services or products, Peter, they're not being shoved in front of another brand. Oh, I have to go here to apply for financing and come back. Feels like a little bit of an out-of-body experience. Where we have done is we put everything into one sitting.
So if a bank comes to you and they want to say they might have commercial real estate, might have a small business operation, they say, look, we really want to have a personal loan product, and they've never done this before, how do they integrate it into their existing loan management system?
So we have the entire loan core. We have a loan originations, loan management system, from the apply button all the way to collecting the repayments on a advertising loan. So some banks will say, Tim, we got to integrate into Jack Henry's Scimitar. We got to integrate into Fiserv's DNA. That's our bank core. Whatever face we employ, it's got to dump all the data in there. So we'll do those integrations. Some will come to us and say, well, there's so many concurrent projects going on, so complicated. We'll leave our core as is, but we really want to get into patient financing or point of sale financing, financing auto loans or both, whatever it might be. We're just going to use you guys as a side core. Don't contend them because we're still trying to figure out what's going on there, but we can marry the data together at some kind of an enterprise data warehouse level, right? So still connect at some kind of reporting level. And then we have people just say, you know what, we're really just a credit union that wants to do a lot of loans. And one of the spaces we find ourselves is basically embedded finance. Please inject the collective we inside of these e-commerce sites as a checkout option or as a financing option. So we certainly help a lot of banks and credit unions to say, you know what, this is going to be financed by so-and-so credit union. And there's a firm-like experience funded by these credit unions to do more loans, to get more members. So there's all sorts of ways of cutting this, but integrating into cores, setting up a side core, or integrate directly into the e-commerce site and just do it independently, just to get into the market.
And when I was watching your demo, I noticed it's like a visual interface, just drag and drop sort of thing. It doesn't look like there's any coding involved. So a non-technical user can kind of set up the interface, right? How do you kind of balance this sort of the drag and drop with sort of the demands of the other kind of operators at a bank?
Yeah, this thing goes really deep. And we sort of think of our platform as a collaborative platform. The product people, the risk folks, the compliance folks, and maybe even marketing can all come into this platform and do their work. There are product studios, rule studios, model runtime studios, places where they can actually edit or create promissory notes, consent. All that stuff is in different doors down this hallway. So it entertains all skill sets, right? Everything at its face value is drag and drop, do yourself. If you can imagine going to GoDaddy, get a domain, take a template, edit some content, press the button to launch. That's the experience that we create for everybody. Now, for the chiefs, right? For the senior credit decision science guys, right? Or gals, they may have a piece of Python code that they've been dying to implement because that's the latest machine learning model they've created. We have the spaces where they can literally copy paste their code right into an editor, compile it, and that model is automatically launched. So we have things catered to folks that just want to design the nicest onboarding flow, 4 or 5 pages or 20 pages. And then we have places on the back end to even host some kind of a binary file that they have compiled, which contains their IP, right? That runs credit risk model. So we go really deep on both ends. I'll give you an example. We had a chief credit risk officer in our office doing some training. They're literally in the office, and they say, hey, look, we have this machine learning Python code that we've been waiting for 2 years to implement, and there's nothing in our space can actually do this. We literally told him, hey, email it to us. And in front of his eyes, we got it launched. That's the depth of the things we've done. And it takes somebody, right? Like maybe you and I, that worked in all aspects of a lending banking environment to think it through this whole spectrum of needs, right? There's a lot of companies out there, we're only doing text messaging for banks. There's a lot of companies that we only do, KYC, KYB, or we only do payments. LendAPI is a place where we've done everything. Whatever CXO title you have, you can come in and there's something for you to do. And it's a complete solution as opposed to solving, in my opinion, not solving the real problem, which is a orchestration platform that works for everybody.
There's one thing I want to dive into a little bit. We chatted recently, you told me about it. This is your deal with Sunglass Hut, which was not on my radar as someone who wanted a lending program. But, as you say, like everyone's FinTech these days. So maybe explain what you're doing with them and how that deal came about.
Yeah. So remember Angela from Fancy VC, FinTech VC?
Angela Strange. Yeah, Angela Strange.
Right. She says every company will become a FinTech company, right? And true to her word, we got a call out of the blue from their financing arm. And we said, what we're trying to do here. Oh, we have a bunch of subscribers in the UK doing this stuff, millions, and we want to bring this whole thing into the US. That's our expansion project. And we couldn't believe it at first, 'cause we're just a year and a half old. And I think they found us on the internet. You and I both, they just found us. We don't have a sales team here. So they just reach out to us. And they said, hey, we don't want to, import our technology from European theater to here. We want to find new tech, fast to launch, right? All the things that we kind of talked about, and go into all the stores. So we sat down with them, and long story short, we got them in production financing in 3 months, which is to the testament of our platform. We built everything already. If there's any customization, we can quickly sort of modify it to the Sunglass Huts of the world to get them in market. So there's like iPad experience, where the store staff can follow the customer around. Oh, do you want this? Do you want that? Is this what you need? And send them a text message, QR code. They can continue that journey on their mobile phone, do their consents, sign a promissory note, take a picture of their first payment method, and we take a down payment, and they can walk out of the store with those sunglasses. And we will remit the remaining payments in the next, 12 or 24 months or whatever.
It's obviously a BNPL type product, but it sounds like you're generating an installment loan.
That's right. It's a 0% same as cash, almost like a BNPL, but over 12. Some of their products, I feel like the parent company bet their whole future on AI wearables. So the stuff that's flying off the shelf right now as we speak are these Meta Ray-Bans. They also own Ray-Ban, the brand. So Meta and them sort of collaborated to build these AI glasses, and that's what's flying off the shelf. These are high-ticket items. Paying for it doesn't really makes it easy for people to afford it. So paying 12, paying 24 makes sense. It almost feels like a Netflix subscription kind of a model. $20, $30 a month, you get whatever you need. And plus they get to add, their insurance product, their loyalty rewards program as part of that thing. They've gone with the household brands at the Affirms and the Klarnas of the world. They're in the brand, but a bunch of conflict and interest. Again, the approval rate is volatile. And if they go to these guys and say, can you add these things and create a custom experience? It's not going to happen. It's one click checkout, right? So for those reasons, these higher end retailers are saying, hey, why don't we just do it ourselves, create our own experience, have our own customer journey, really integrate into their POS system, and cross-sell.
What's your customer base look like today? Obviously you've got banks, credit unions. It sounds like you've got retailers as well. Who are you working with? FinTechs as well, I presume?
Yeah, FinTechs, banks, credit unions, CUSOs, credit union service organizations, retailers, and just run-of-the-mill financial services companies. And it doesn't matter who we're dealing with. The product's it's the same. It's point-of-sale financing. It's B2B2B or B2B2C, right? Whether it's bank financing it, private credit, or the retailers are financing it themselves, it's the same or a similar product. But we work with just about everybody that wants to launch something on their own that needs technology, basically.
So I also want to talk about your marketplace, which is an interesting thing that you launched a while back. Why did you decide to do this marketplace? What is it providing for the industry?
I started this thing 2 years ago, right? And this is essentially a B2B kind of a software company, right? So in my mind, I'm like, how does people know about LendAPI? How do people find us, right? I didn't know how to do like marketing or some kind of a, optimization, play around with Google and all that stuff. So I said, you know what? Other people have figured it out, right? There's a lot of companies that start with nothing. How do they do it? How do they generate traffic to the website? So every morning when I go to the office, I'll just pick out a random YouTube video to learn how to do, I guess, SEO, SEM, or GEO, as they call it now. And all of them are trying to very salesy, right? Oh, you got to hire us to do the real, SEO work. But one day there's a guy that says, you know what, that sounds like a real sort of a teacher in this space, and talk about a bunch of stuff. And then a couple of minutes into that podcast episode or YouTube episode, he says, well, if you're starting from zero, and my ears perked up, and he says, to start from zero and to generate traffic, you need to be the source. And I just fixated on that statement. I'm like, what does that even mean? Got to the office, I start thinking about it. I'm like, for LendAPI to do what we need to do, we have to partner with just about everybody under the sun, from KYC, KYB, to all the credit bureaus, to all the plaza of the world, right? To all of these third parties that come in and help my clients make those decisions, payment gateways and things like that, Move, for example. And I said, well, I am the source from that kind of a perspective. Why don't I have a marketplace on my website where people can find all of these players, whether you're doing identity verification, fraud detection, credit bureau reporting, cash flow analytics, and come to LendAPI and find these people, almost like a registry, like a white page, yellow pages, if you remember those. But tangentially, if people are searching for these partners, there might be a chance for my name to show up. So that was my hack, my desperate hack to say, well, maybe I can write the long tail keywords. These are all new words that I've earned in the past couple of years, that if somebody types in Plaid on Google search, there might be a chance that says, hey, Plaid is integrated with LendAPI. And people are like, what? What's LendAPI? And somehow or another, Peter, that worked. So selfishly speaking, right, it was for us to kind of get notice on the website. And secondarily, right, I need to have a listing of folks that works with us anyway. So if somebody wants to launch a new product, oh, I like Secure, I like Plaid, I like Equifax. Tim has already got these things integrated. Great. Makes my decision a little bit easier. Of course, right, we work with so many people. Sometimes I forget who we work with. So when I talk to a client, I'm like, okay, so go onto our website, go to Marketplace. There are people literally like on those subpages, right? Call them directly, get a deal going. So instead of, hunting for that sales email or a sales phone number, they can go to my website, go to the Marketplace, find the category they're interested in, and actually talk to a real person that's in the partnership or the sales department to shortcut the amount of paperwork that needs to be done. So, and then interestingly enough, one of the VCs on X, on Twitter, I just saw it. It's like, oh, I found this new deal flow website, and it's LendAPI Marketplace. So apparently we list a lot of new startups, right, in the fintech space as our partners onto the site, and he's been using that as like a discovery channel for new investment opportunities. So he's been going to our website to find new people to talk to. So he has an unlimited amount of benefits, I suppose. But yeah, it's keep on growing. We've got 300 people in there now, I think.
I want to talk about AI for a minute, not so much the product development coding side of AI, but I read that you've got like these products called Underwrite AI, Doc AI, MyOCR.ai. Tell us a little bit about your approach here.
Yeah, well, the meme nowadays is that, SaaS is dead, AI ate the software world. And I feel like people that works in fintech or financial services and or medical field still have a bit of a moat, right? So AI still can't really make that ultimate decision of issuing credit. There's the FCRA, ECOA, UDAP, all standing in the way of that. And the regulators in our space haven't accepted that just yet. But when I talk to credit unions and banks, right? For example, we visited a credit union in Florida. Their aspiration is to double their members from 1.5 million to 3 million. Double their portfolio from $15 billion to $30 billion. So I asked them point blank, kind of jokingly, right? Are you going to hire 3,000 more employees or build another 100 branches, right? The answer is clearly no. But they want to do all of that stuff. The only way to get there is to do massive amount of automation, right? To free up their staff to build new product and build new assets. And when we look at the AI world, we certainly build some stuff ourselves and we have partners for a bank to accept that an application comes in, an agentic agent, AI makes that ultimate decision. Where might be 2-3 years from now, right? Mm-hmm. But we can bring in agents that can do singular tasks that can save a minute or two, right, per each one of these applicants for real, personnel that are sitting in the chairs. So we build these singular tasks. So our Doc AI product, for example, Peter, is literally read in anything that could be scanned in. It could be a driver license, passport, financial statement, certification, good standing, W-2, 10, whatever it might be. And it actually understands the context was being read in. Beginning balance, ending balance, debit, credit, right? Does it, all the PIs is on that piece of document. And it will actually do something with it. It will do math. All the math checks out. The beginning balance adds up to the ending balance with all the credits and debits, right? All the watermarks is all there. The information that's being extracted from the bank statement matches the information that was provided on the application. So it does all of these rudimentary things that a processor or a junior underwriter would do. And it just saves a lot of time. And it's consistent. It works 24/7. It really frees up a lot of people to do higher level tasks, such as making that critical credit decision and not read through the bank statement, right? Even if you're the most experienced person, it will take a couple of seconds to read through, where a junior person might take 4 or 5 minutes, right? And those things add up. When you go from 1.5 million to 3 million of anything, those 2-3 minutes adds up. So these are the tools that we're building, not necessarily making that ultimate credit decision. I think we're pretty far away from that yet because it's regulated. But these single tasks, understanding the document, understanding what is being said in an SMS message, understanding what the customers are emailing you with attachments, and respond and do something with it. These singular task AI agents are very popular in our space. And it's not me creating stuff, creating hammers, trying to find nails. Our customer demands this.
You mentioned Techstars, but I also saw you've been selected for the CURQL, CURQL, I should say, accelerator program, which is all about credit unions, serving credit unions. How are you kind of approaching credit unions? And is it a different approach than what you would do with banks and fintechs?
Fintechs, banks, and credit unions or community banks are all trying to cater to their clients, but credit unions have a different agenda, right? Their shareholder is their members. All the decision that they make is member first, member only. They're not-for-profit organizations, so they're not trying to please some other shareholder to extract, the last dollar of their clients. So for that reason, the type of product we build for credit unions are very member friendly, lower rate, trying to find ways to approve people as opposed to trying to find ways to decline people. So the whole process of building this product, not just from a UI UX perspective, but underwriting, pricing, right? The way they collect, the way they communicate with the customers, that all has a different sort of a flavor to it. It's very human centric. And the people that work at credit unions are very cool too. They're a lot less anxious. They're all very friendly to talk to. But fundamentally, they all have needs, right? Can we do digital issuance on credit cards in real time for our members? Can we extend our mortgage application all the way to the hands of realtors that helps our members to get moved to their next home? Can we do a home improvement loan at the heels of a mortgage application that was just being approved, right? So they're thinking about these products to help their members to get through their day-to-day. No different than banks and financial services companies, but they have a slightly different agenda. And CURQL is funded by 160 plus credit unions. So It was a great experience. We get to visit all of these credit unions. Last week, we were in Washington, D.C. visiting Bank Fund Credit Union. They're the credit union for IMF and the World Bank. So they have 100 or so thousand members, and these members are all pretty well taken care of by their constituents and governments and all that stuff. So they have a lot of high-end mortgages they need to take care of, and people with certain needs and all that stuff, right? So that credit union has a completely different perspective than another one that's serving the near prime, slightly subprime, really in the community, right? Helping them to not take a payday loan, but take a loan from us and help them to sort of ride through whatever economic situation they are in, right? So all these credit unions have an agenda to serve their members, but the approach is different. And for some reason, it's our team kind of likes that kind of approach. So being part of the CURQL is a breath of fresh air. But at the end of the day, people still need technology that can deliver products and all that to their clients.
How should we think about LendAPI and its place in the sort of the lending ecosystem as far as infrastructure goes? I mean, there's others doing embedded lending. How do we think about LendAPI and its place?
We think of ourselves as just a gigantic orchestration platform that can launch products quickly, right? Go to market, get to market faster is the number one agenda on people's mind. 10 years ago, Peter, when I first started this, there's still a dichotomy of build versus buy. Right now, when I talk to the CTOs of these banks, they're like, "Thank God you're here. Can you launch this thing next week?" So I can watch you to do this, right? So nobody even think about building this stuff themselves anymore. It's all about get to market quickly. Mm-hmm. So to do that, I gotta have lots of these partners, right? We can't do everything on our own. And yes, we have certain features that are overlapping with some of our partners, like Loan Pro, or they might see us as a competitor. We integrate with everybody. Like we have this new project with a subsidiary of Berkshire Hathaway, right? They decided to use Oscillator, Loan Pro, right? And other vendors that we have relationship with. But if you look at these vendors, does LendAPI have some of these features or functionalities as Loan Pro and Oscillator? We do. But we let our clients speak on, the dealer's choice, right? If they want to use Oscillator, Tactile, whatever it might be, bring it in. right? It's not a LendAPI show, but we will connect everybody and let the client choose which vendor they want to work with. But my job is make sure they're all there. So when they do choose to work with them, it's just a enable button, put their credentials in and light it up, whatever attribute scores that flow through, whatever alloy, for example, right? It's come right to the system. We don't really have an agenda either way. But the main point is to get people to market fast.
Okay, I want to switch gears and talk quickly about the course you teach at USC called FinTech Fundamentals. So I'm curious to know, when you're chatting with your students, what do you tell them about where the biggest opportunities are in FinTech right now?
I taught that course for about 2 semesters at USC, University of Southern California. And some of my students have gone on and raised money and built fantastic, cryptocurrency, blockchain, and or stablecoin companies, right? They raised a bunch of money, probably raised more than I've raised, which I'm really proud of. I'll talk to a lot of them. So when people ask me, so Tim, what do we build? What do I build, right? My clear answer is I look at an average U.S. consumer, right? What are their big concerns? Average mortgages, cars, some kind of a personal credit to live through their day. Mortgage, cars, and probably credit card. That's what I'm trying to get at, right? If you want to work in consumer banking fintech, it's probably one of the three, right? These are the most important decisions people will make. Buying a vehicle, going to last 3, 4, 5 years. Buying a home, that's going to last 20, 30 years. Having a credit card relationship, that's average 7 or 8 years, right? And maybe bank account and payments are the fifth and sixth, if you will, fourth and fifth. So if you work in fintech, you want to build some stuff or, work at some places, right? These are the 5 things: mortgages, auto, personal loans or credit card, payments, and bank accounts, right? These are the 5 things that people think about this all the time. So if you want to build something, build a mortgage app. That's probably your best bet. Build the biggest money revolving sort of a product, or all the way to, payments, right? There's a lot of that needs to be done. And nowadays payments all about stable coins and cross-border stuff, which we kind of talked about, in some other episode that we were both on. So those are the 5 things I tell people, just my students and everybody else, budding entrepreneurs. 5 things that you want to attack. And you just have to look at yourself, open up your own wallet and see what's in there, right? And those are the fintechs you want to probably get into. Even if you get into a crowded space, that means there's demand for it, right? Personal unsecured loans is about $1.2 trillion, right? Any basis points of that, it's a bona fide company.
Okay, so last question then. What's your vision for LendAPI, and what, if we talk again, say, hopefully before 9 years, but let's say we talk again in 5 years on the podcast, what will you have hoped to have achieved by that?
My personal vision has not changed since like 9 years ago, right? Can we ultimately get to a point where we can launch products without even thinking about it, right? 10 years ago, 20 years ago, if you want to build a website, you got to hire a webmaster, play with HTML code and all that stuff, right? It's very cumbersome. Today, you go to GoDaddy, get a domain, take a template, edit the content, press the button. You can launch your own thing. I want to bring the same experience here. We're getting there, right? So no longer do you have to say, my God, I have to raise $5 million and hire a bunch of engineers and get to market maybe next year. You can use this, launch, try it, see if it's successful, launch another product, and just go forth with it. I want to lower that barriers of entry to nothing, total cost of ownership to nothing. So I can enable myself 10 years ago, if you will, and all of the people, like including Sunglass Hut, how are they a fintech? But they're a fintech now, to launch their products on their own with minimum amount of help and just launch products.
Yeah, and as you say, there's going to be people starting businesses in 5 or 10 years' time that will benefit from all the technology that has come before. So anyway, always great to chat with you, Tim. Thanks so much for coming on the show. Best of luck.
Thank you, Peter. See you soon.
For anyone creating and launching lending products today, it is a good time to be alive. Speed to market is often a critical piece of the puzzle, and what LendAPI has done is create a launch platform for the next iteration of financial services. Just as GoDaddy made it trivial to launch a website, LendAPI is making launching a lending product equally accessible for banks, credit unions, fintechs, and even non-financial companies like Sunglass Hut. The build versus buy debate is essentially over in his view. Speed to market is now the main conversation CTOs want to have. Anyway, that's it for today's show. If you enjoy these episodes, please go ahead and subscribe, tell a friend, or leave a review. And thanks so much for listening.